I was just in Europe last week briefly, and there everyone rents.
Yeah.
Everyone rents.
And everyone's happy with it.
Nobody has an issue with it. It's not, it's really just it's a North American mindset about home ownership, and there's nothing wrong with renting. For some, like in Canada, in North America, mostly Canada, because the U.S. has a large rental population, but we're obsessed with home ownership, which drives those prices. So, got to shift that mindset. Really,
I know, and I remember during COVID when I'd be working with buyers and they were, they kept getting more and more money so that they could get something. And I would stop them and I would say, listen, are you guys sure that you want to do this? Like, you can rent. I'm like, it'll pass in the end. It's not like they're just going to go up forever. And they were just obsessed. No, I need to own a home. I need to own a home, whatever it takes. And I'm like, okay, well, I'll help you with that as long as you're comfortable with it. That's the thing. Everybody that buys is comfortable with buying, or else they wouldn't be buying. We can't push people saying like, you better get in now. Market's never going to go down. Like, any realtor that does that is an absolute idiot, obviously.
Welcome to the Ottawa Real Estate Podcast. Join your hosts, Paul Stevenson, David Warren, and Greg Campbell, as they explore the world of real estate and mortgages. From the heart of Canada's capital to markets nationwide, and even a little beyond. Get ready for expert insights and hot topics. Let's get started.
From the heart. I'm just adjusting things slightly here suddenly. David, I thought I was prepared, and then I wasn't prepared. Let me move over a bit.
You got me jostling.
I'm just like, where do I go? I think I'm good now. That was too funny. Oh man, let me get a little bit more light there. Steven, how do I look? Beautiful. All right.
Radiant.
Radiating amazingness. Welcome to the Ottawa Real Estate Podcast. I'm one of your hosts, Greg Campbell. I'm a realtor with the Campbell Merrick Group at eXp Realty. Our office is located at Train Yards. For those of you who are in Ottawa and curious about where I'm at, joined with my co-host, David Warren, owner, level 2 mortgage agent, referral mortgages. And today we are without Paul Stevenson, our hero who took on the task of doing a solo job last week. And what an amazing job he did, right?
He battled. I was expecting a 5-minute show, and he went over 30 minutes. He just likes hearing his own voice, I guess.
Yeah, he's never at a loss for words. I think that's why we let Paul kind of lead the show, right? He can just keep going.
For sure.
Amazing. So, you know what, Dave? Let's just get into it. Let's forget about the banter. I think people are anxious to hear what we have to say. I hope so. Anyways, I've got a story, or like a lesson more of for what people need to look out for. You may be seeing this, and I don't know how exactly it's addressed from a lender perspective or whatever, but so insurance companies. Now, lately, some of you may know, some of you may not know, wet certificates, wood efficiency technology transfer certificate for a fireplace, like a wood fireplace, wood stove. In certain instances, it's required for insurance. Then it was kind of like it wasn't always required for insurance. And, you need insurance on your home. So now that I just went through this twice in a week, last week when I had 2 closings coming up, I'm definitely not doing an inspection without a wet certificate again on a property that has a wood stove or a wood burning fireplace. I had 2 deals that were closing last Friday. Of course, it was a long weekend. Tuesday morning, I get a call from one client saying, like, we can't get insurance unless we have a wet certificate for the fireplace. I'm like, that's nonsense. They call back. They could verify that. I call my insurance. They said no. They said you don't necessarily need it with all insurers, but if they're asking for it, just ask for the 30-day grace period. And I'm like, okay, I forgot that in the past, I remember that happening, where you ask the insurance company for 30 days post-closing so that you can get it sorted. Usually they're good with it. So they refused, and then finally, she finally got the right person and they agreed to it. So that was one. As soon as I get up, and in the meantime, I had booked a guy to come in and do it the next day regardless. So we were going to get it done. As soon as I get off the phone with that guy, with the inspector who's going to come and do it, I get a call from another couple that's closing. They're like, like, what's this wet certificate thing? Insurance is calling for it, saying we can't close it out. I'm like, okay. I'm like, here we go. So they got the extension for that. They got a 10-day grace period. They're getting that done now because they closed on Friday. So for insurance, if you are buying a home with a wood stove or a wood fireplace and you did not get a wet inspection and the insurance company says that you have it, I would double check and make sure that last minute before closing, they don't ask for that. And then you're scrambling to get it done. Secondly, poly B piping. It's a type of piping where there was issues with it in the US years ago, where the fittings around the piping in the house, when it gets too hot or too cold, they'll loosen up or they'll crack and you can get a leak. In Canada, well, in Ottawa specifically, there was a lot of properties in Orleans that were built with poly B piping. There's still many that have it. My parents have it. They've never had an issue because homes are, quite insulated here. So the chances of it being a problem are slim unless the installation wasn't good. Now, a few years ago, it was a big issue where some insurers wouldn't do it at all. You'd have to get a quote. People would change it from poly B to copper piping. Or for any
or the PEX
type of piping, PEX, yeah, exactly. Sorry, and then what happened was it seemed to be loose again. It was okay. You could get insurance. Now, what happened was we found out in a house that my clients were going to offer on that they had poly B piping, and it was kind of like they called their insurance company. Insurance companies like, we're not going to do it, and I'm like, that's nonsense. I'm like, there's companies that will do it. So I call one company, they're saying like, yeah, there's this thing going on with poly B again. And I'm like, okay. So I call them back. They call their insurer again. They call a different insurer. No chance, poly B. So the seller gets a quote. I end up calling my plumber who's done poly B for me in the past. He says to me, he did 3 poly B jobs in the last 3 weeks. Usually he does 1 a year. So clearly the insurance companies right now, guys, are doing things that they haven't done in a while.
There's a loss.
Yeah. So there's been a bunch of losses, obviously, because of these things, and they're protecting themselves. So be prepared that if you do a home inspection and they have poly B piping, be prepared to not get insurance or search hard for an insurer and pay through the teeth for that, or work on getting a reduction to support, getting it repaired. Now, a plumber's job will come in, they'll do it, but they're going to cut holes in the wall. And that fee that the plumber's charging does not include, putting back drywall and everything. You're going to have to get a contractor to come in and do that. So 2 things to be aware of: wet certificates and poly B piping. Insurance companies are at it. At it.
Whenever they make a change like that, it's typically that there's been a huge loss. I know in the States for poly B, there was some huge class action lawsuits because they had it in condo buildings, and it would be massive flooding throughout the entire building, causing like huge losses. I know in Ottawa, there was a couple of buildings that had poly B downtown, and that was getting changed, but I know was an issue for insurance on those buildings. I can't remember exactly which ones, but yeah, I mean, that doesn't, on a financing side, that doesn't come up, but obviously for a borrower on closing needs to have insurance in place. Now, the wet certificate side of things, because in behind the scenes, unless it's brought to the attention of a lender, like poly B or like knob and tube wiring,
right?
Unless it's specifically told to the lender or outlined in the MLS that it has knob and tube and poly B, they don't raise it as a flag because they don't, they just assume that it's PEX or copper piping, or that it's, or that the knob and tube has been remediated and they put in either rewired it or put in GFIs to mitigate any shorts. But when it comes to the wet certificate, I do see them on my side on the lender portals. I'll see a lot of times the solicitor condition as being verifying wet certificate or wet inspection. Now, again, that can be replaced by adequate insurance. And there's other aspects that can be replaced by, like, a water potability test, for example. Sometimes lenders will have that as a condition of financing, showing water potability. They'll even have this on a refinance for somebody who's already been living in that property. Now, one thing that you can do as a homeowner or if you're a mortgage agent is you can ask for that to be pushed on to the title insurance. So when they're getting, even on the refinance, they're getting title insurance, that there's a rider for water potability that is included on it. So that's kind of avoided from having to get that test done, which even though it is, I believe it's free to get through the city, but timing doesn't always align.
The potability, that's another new one. So I mean, what this comes down to for me is that I'm going back to putting the condition of insurance on the property in all my offers, just as protection against, this down the road, and just to make sure that that we do our due diligence, because clearly it's becoming a thing. Aggressively insured.
Yeah. Well, and even then, even if you don't get that wet certificate up front or that potability test, the insurers are actually just going to premium your rate.
Yeah.
They're just going to, like, if you don't have it inspected or you don't have proof that the fireplace, is sound and that there isn't, it's not hardwood butting up to it or whatever it may be.
Yeah.
It's far enough away from walls, et cetera. You can still get, in a lot of cases you can get insurance, but like you said before, it'll just be a lot more expensive. So you're better off spending that. In this case, water potability is a free test, or the wet certificate is a couple $100. Like, just get it and save yourself that in probably the first 6 months.
Yeah. Okay. Well, that's my story of the week. That's my buyer beware. It's my buyer beware tip of the week, people, for being active in the field. Active in the field. Let's get into the news. Finger on the trigger. In the news, I got an article here from Better Dwelling I thought was pretty interesting about the weakest markets in Canada. So Canada's real estate market might seem calm on the surface, but big shifts are happening. New data shows demand measured by the sales to new listing ratio is falling, especially in cities like Toronto and Vancouver. Obviously, these once red hot markets now have the weakest demand in the country, with Toronto's sales to new listing ratio at 27.6%, and Vancouver at 30.3%. That's crazy. Despite this, prices haven't dropped much as sellers hold firm, hoping for a bounce back. Meanwhile, government-heavy cities like Quebec and Sudbury are seeing a huge surge in demand, and a push to bring workers back to office may be driving this trend, with buyers staying close to job hubs. Now, Ottawa remains one of Canada's more stable and real estate markets. As a government-driven city, Ottawa benefits from a steady influx of public sector jobs, which provides consistent demand for housing, helping insulate it from severe market swings. We always talk about this. The city also experiences fewer speculative investments, making it less vulnerable to sudden price corrections or crashes. While cities wrestle with economic shifts, Ottawa's stability positions it to maintain a balanced real estate market. Even Calgary, which previously saw skyrocketing demand, experienced the biggest sales to new listing ratio drop in the country. Despite this, it remains balanced, a sign of how tight its market has been. As we head into fall, sellers are rushing to list their properties, but buyers are pulling back, creating downward pressure on prices. In cities like Toronto, some homeowners would rather default than cut prices, signaling deeper financial strain. Crazy. Are these shifts a sign of a broader market correction or just temporary fluctuations? I think that's wild. And I wanted to talk about this because of the comments regarding Ottawa. And we talk about it, and I know there's a lot of listeners out there that think we're on the same level as some of these other big cities waiting for this big crash, but we are somewhat insulated to an extent, obviously.
We always have been. And we've talked it, we're what, episode friggin' a million? We talked about it ad nauseum since starting this and well before that. When you look at Ottawa's, pricing over history, we've always had an appreciation, and it's been pretty consistent. And there's the odd spikes like we saw, I know there was a comment about, prices jacking because of COVID-19. That happened in every market in North America. It's not just Ottawa, but that's driven by the rates being free money and being told by the government that it's going to be free money basically indefinitely. So why wouldn't you go and get a bigger loan than you were expecting? And when the cost of servicing that debt is basically the same as if it was, normal rates like it was in 2019. But when you look at the average price increase or appreciation, it's always consistent throughout Ottawa. And we've always talked about it between strong federal government, municipal, provincial, but then high tech sector. And something that that article left out was that we have an immense high-tech sector in Ottawa that is one of the largest in Canada and one of the largest in North America that drives high demand for property. But again, to that point, we don't have a lot of speculation in Ottawa like you do in the other major hubs. So we're always able to kind of navigate those really big and significant ebbs and flows.
Yeah, and I mean, I'm just going to go into this comment here right now from the show from Chosen, I guess we'll call him. That's what his thing is. He's talking about townhouse at 500K is ridiculous, and Greg knows it. COVID-19 screwed up the market. JT opened the immigration floodgate. Canada is doomed. There is no reset. We are speeding towards an unavoidable sovereign debt crisis. I partially blame realtors like Greg. So it's an interesting comment because 500K for a townhouse is ridiculous. And it is ridiculous because right now, the nicer townhomes are averaging still around 600. So for a drop of 500, a drop to get us to 500 for a townhouse again, that's an international crisis, basically, to drop $100,000 overnight in a city like this. I mean, I think at one point, maybe we'll be on average at around 575, maybe, which is fair. And I think, it can balance around that. But, and I love the blaming realtors thing. It's like, if we didn't work, I mean, I would have no job. So you're saying I should not work and do what I do well because the economy is funny? Like I should just quit? So if that's what you're implying, that realtors should just quit, then let's see what happens after that in terms of fire protection. And
but there's still people are still purchasing those homes. It hasn't realtors are marketing them and putting them up. There are it's really a supply and demand. It's always supply and demand. Prices are dictated in every market based on supply and demand. And in Canada, in Ottawa, we talked about it, supply is low, demand is high, especially in cities like Ottawa, where it's evident that prices have remained pretty stable. We had a little bit of a dip, this past January, February, and the previous January, February, which we talked about it leading into it. We were talking about it. If you were going to buy that was actually and based on history, the previous year, that was a good time. But to blame realtors is ridiculous. And people need to also look at themselves because those people are buying the homes. They need homes. And if you're selling a home, you're wanting to get top market value for it. And you're also, when you're buying, you're wanting to get, yes, best price, but you're also buying it. If you don't like it, Chosen, then don't buy, period. That's really it. It's
exactly right.
There's no one forcing you. And I was just in Europe last week briefly, and there everyone rents.
Yeah.
Everyone rents.
And everyone's happy with it.
Nobody has an issue with it. It's not, it's really just it's a North American mindset about home ownership, and there's nothing wrong with renting. For some, in Canada, and North America, mostly Canada, because the U.S. has a large rental population, but we're obsessed with home ownership, which drives those prices. So, got to shift that mindset. Really,
I know, and I remember during COVID when I'd be working with buyers, and they were, they kept getting more and more money so that they could get something. And I would stop them and I would say, listen, are you guys sure that you want to do this? You can rent. I'm like, it'll pass in the end. It's not like they're just going to go up forever. And they were just obsessed. No, I need to own a home. I need to own a home, whatever it takes. And I'm like, okay, well, I'll help you with that as long as you're comfortable with it. That's the thing. Everybody that buys is comfortable with buying, or else they wouldn't be buying. We can't push people saying you better get in now. Market's never going to go down. Any realtor that does that is an absolute idiot, obviously. But, I guess they exist.
Where I was in Paris. It was for 1,000 square foot apartment in central Paris was between €1 million and €1.5 million for 1,000 to 1,200 square foot apartment. And every city I go to, I always stop in at real estate offices. They to see what places are listed for, what they're going for on average. And that was kind of prototypical. I talk to my friends that are living there. They rent. They have outrageously good jobs. They rent. They don't even think about it. They don't care. It's not a topic of conversation about buying a home. So, these places that are listed are like, well, if you want to buy, you want to own here, this is the price.
This is the price.
Take it or leave it. It doesn't matter. Otherwise, we're renting it out, and everyone just rents, and everyone invests elsewhere. They invest and they buy a property. They have a property in the south of France instead, in like a cheaper area, and they rent in the city. And it's the same for others elsewhere. So I think for people that are like getting hung up on, realtors pumping the market or getting, it's actually homeowners or buyers that are and the mindset in Canada that's pumping the market.
We know it.
Are you trying to grow your mortgage business? Centum has the tools and support to help you take your business to the next level. Get access to everything from free unlimited custom marketing to daily direct pay. Find out what your business can do with Centum. Learn more at joincentum.ca.
Are you thinking of buying or selling a residential property? Relationships are at the heart of every real estate transaction. At Galtin Poirier Avocats Lawyers, we love to bring residential buyers, sellers, agents, lenders, mortgage brokers, and the law together to close the deal for you. For an effortless client experience that opens doors, call us at 613-744-4488 or visit our website at galtinpoirierlaw.ca. Let's get to the heart of your deal.
All right, David, get us into some rates here.
Mm-hmm.
Talk about what's going on in Canada.
Yeah, I mean, I think a lot of people probably saw Stats Canada last week come out with the inflation numbers coming in at 1.6% for September, which was below market expectation of 1.9%, was what the market in general was expecting. There'd already been talk of a likely 50 basis point or 0.5% rate drop by the Bank of Canada to the policy rate on the October 23rd meeting, which is for Tuesday, which is tomorrow when this comes out. But that the odds of that have increased dramatically, obviously, with that coming lower, stripping out housing and shelter. The true inflationary number was at 0.4, which is obviously drastically low. So what does that mean? Expectations by 5 of the 6 major banks are expecting a 0.5% drop October 23rd, expecting another on the December announcement, expecting another drop of at least 0.25 point, but if not even half, unless some extremely strong numbers come out between now and then, which we're not expecting. But two of the big banks did come out though, expecting, kind of saying that they're predicting by the end of 2025 this is Royal Bank of Canada and National Bank, as well as, so they're two of the big 6, obviously, and Desjardins, which is the largest credit union. They're forecasting beyond that a further 1.75% drop by the end of 2025. So they're expecting 0.5% tomorrow, October 23rd, and then a further 1.75% drop by the end of 2025 because of where we're at in our economy, where we're at in our job market, and the overall stimulus needed for the economy that we've been thus far kind of propped up by immigration, and which has now that door has kind of slowed quite a bit. Even this morning on my way to the office on the news, they were talking about a lot of the major universities having 50% or less international student enrollment because of than expected from the previous few years because of the immigration policy changes. So that has a ripple effect for the Toronto and Vancouver markets. With that's why condos aren't selling as much or needed, right? Because there's obviously that less of a demand from students as well as just permanent residents or new immigrants coming in. So I think that all plays into it. But that was also new money propping up the economy that has now been stripped out. So it'll be interesting to see. Data does lag, and so the data on inflation, the data on where we're headed, these rate cuts, how it impacts the economy. It does take time for it to actually have an impact on people. So, did they start the rate cuts too late? Did they, do they need to do some large drops like this 0.5 point in order to prop the economy up so we don't fall into a long-standing recession. Right now, it's, people are saying that we're actually deflationary numbers. So we'll see what comes and what tomorrow's announcement has from Tiff Macklem as far as where he's seeing the economy and where he's seeing it going towards the end of the year.
Yeah, there's so much going on, and like we've said before, it's impossible to predict where things are going right now, because even with these rate drops, I don't think it's going to affect things too much in terms of the market with everything else going on in the world and people just being more cautious. So, I mean, the next 12 months are going to be insane, because we're, like we've said before, we're going to see things that have never been seen before in Canada and throughout the world when it comes to economics, I think.
Yeah, I think they're having to be, the Bank of Canada is having to be cognizant of the fact that all of the mortgages that were started to be pulled out in 2020 and 2021 are coming up next year. The start of that wave is coming up next year for renewal.
Right.
COVID hit in March, mid-March of 2020, and it was shortly thereafter that rates were plummeted and the market picked up. And that was kind of in that second quarter of 2020 and third quarter. So all of those mortgages are coming up. And I think the Bank of Canada is very cognizant of that we're, we've kind of insulated that population that has those rates from back then, that if their payments do jack up by 50 and 100%, that it's going to cripple the economy. And so I think they're also keeping that in mind from where we are right now, which is a very stagnant economy as is, without those people's discretionary funds being, kind of going away because of them having to renew into a higher mortgage. But yeah, I mean, I think that'll be, I think that's what one thing that they're having to keep in the back of their head is that forward thinking of not delaying too long as well, because they need those mortgage rates.
Well, yeah, exactly.
Yeah.
All right. Let's get into some market stats. I chose Orleans. How about that? So I got a quick summary of what's going on. It's something new that I'm trying here now. The East End Ottawa neighborhood of Orleans is showing solid demand, particularly for row units and stacked townhomes. Active listings span from 344,000 to 3.2 million, but the most competitive price range falls between 400 and 700. Homes are typically staying on the market for about 35 days, which is, still great. Some lingering for much longer. Those are the overpriced ones, obviously. Meanwhile, sold properties are closing for around 96% to 100% of their listing prices, emphasizing a market where buyers are willing to meet asking price. Notably, homes in the 350 to 650,000 range are moving quickly, with several transactions happening in just a few weeks. In this competitive market, homes priced under 400,000 are selling fast, obviously, often in under 20 days. Row units and townhouses are particularly popular, reflecting affordability and buyer interest in these types of properties. On the other hand, detached homes over 600,000 are taking a bit longer to sell. Despite this, the market is healthy with solid demand and price stability across property types. Buyers should be ready to act fast, especially in the lower price ranges, while sellers can expect competitive offers close to their asking prices. So this is a summary I did. I put it in my system. It spits this out. So there's a couple things we can talk about here where the stacked townhomes now have come down to a reasonable price, where, I sold one a couple weeks ago that we had listed, for 400,000. 400,000 for a stacked town is good. Some of the older ones are selling for less. Some of the ones built in the mid to late 80s are hitting around 350, those condos, which is a pretty good price. I think that moving into next year, anything now is going to sell for a little bit less. There are townhomes, older townhomes that need work. You can get them for 500,000 in Orleans, but the typical price point where most buyers are shopping who want something new, more modern, are still going to be between 600 and 650. Whereas the one selling at 650 at the peak would have been like 700 for a town, which is bananas. So now that's coming down a bit, but there's even detached homes, like older detached homes selling in like are in the 600s, which is great. Orleans is still one of those places where you're going to get way more bang for your buck. So And anybody who wants to buy and is looking for a better price and can live anywhere in the city, like, I'd put my money in Orleans for sure. It's just something to look at. But the market, it's still moving. There's more listings coming out. There's been a little bit of a lull as people wait for this rate change tomorrow. I know that there's people just sitting around waiting, and listings have kind of slowed, anticipating that the ones that are currently listed will sell in the within the next 2 weeks. So yeah, anyways, that's just a little bit of information for everyone there.
And great information at that, Gregory.
Thanks, Dave. Thanks. What else do we have here?
I think you got a little definition.
I got a definition this week. We're trying to be structured here. Look at that. The camera keeps moving here. What's going on? I got a loosey mount here. My definition. I'm going to do a definition. You know what happened? Like, I think it was 2 weeks ago or 3 weeks ago. I wanted to do this definition, and Paul just kept going, and he just forgot. He just forgot about the definition. Paul was rambling on. Got to bust Paul's balls while he's not here. Railroading Paul. That's right, Steven. Taking him down, making fun. All right. My definition. So, in the context of a real estate agreement of purchase and sale, a right of first refusal, this is the definition. A right of first refusal can be added as a condition when the buyer's purchase is conditional or contingent upon selling their own home. So here's how it works. Conditional on selling the buyer's home. The buyer may need to sell their current home before they can afford to close on the new property. In this case, a right of first refusal can be used to protect both the buyer and the seller. Seller's protection. While the buyer is working to sell their home, the seller may continue to market their property to other potential buyers. If a new buyer comes forward with an offer, the seller is obligated to give the original buyer, who has the right of first refusal, the chance to remove their condition, selling their home, and proceed with the purchase. So here's how it's triggered. If another qualified buyer presents an offer, the seller must notify the original buyer. The original buyer typically has a short window, 24 to 48 hours, to either remove the condition to sell their home and proceed with the purchase of the property, or decline, allowing the seller to move forward with the new buyer. So here's something about that everyone needs to know. The way that it works now is, if you have a condition, if you go in to offer on a home that has a right of first refusal on it, if they agree to work with a new offer, they're going to want that offer to remove their financing and their inspection condition before they activate with the other buyer the opportunity to remove their condition. So you're going in and you're spending the money on an inspection, dealing with your financing, still with the chance of losing the house, because that's how the seller is protecting themselves. Because if they just say, if they push for it and then the first offer declines and the second guy goes in and he does the inspection of the financing, then he doesn't get it, then the seller is screwed. And then he's losing both offers by chance. So that's something you need to be aware of. Why is this useful? For the buyer, a right of first refusal gives them more time to sell their home without losing on the property they want. For the seller, it ensures that they can continue accepting offers and have a backup plan if the original buyer's sale doesn't go through. And another thing to know is, if you are putting a right of first refusal on a property, the property will most likely have to be on the market for at least 30 days. And you're going to probably pay closer to asking price regardless, because they are taking a risk by giving you the opportunity to sell your house instead of getting a firm sale. But everything's different. You just got to figure it out with your realtor and make it work for you.
Now, in a case like that, though, Greg, so let's say I'm the seller and somebody, I have an accepted offer with a right of first refusal, and somebody else comes in with a secondary offer. Am I, in a case like that, and you're the listing agent, are you having a conversation with the realtor that put in the original offer and saying, hey, you might want to get your ducks in a row, where we do have another offer, we haven't triggered it yet, however, they're going to do inspection and all that? Or are you leaving them in the dark and then triggering it?
That's an interesting question. For me, I'll let them know. And that's within the seller. Like, the seller kind of makes the ultimate decision, right? So it could go either way. A lot of times the seller's agent will not notify the first buyer until the other conditions are removed and just give them the 24 to 48. But in a lot of circumstances, they will tell them, they say, like, look, we've got another offer. The process is starting. see what you want to do. So that really depends on the scenario and who's doing the deal, but it's tricky. That's one of those things that's just kind of weird. It's gray, it's vague, but that's how it can go down. So either way, when you're getting into it, just be prepared. Be prepared to act fast. And if you really want the house and it's conditional on selling your home, I would price your home competitively to sell. Don't sit there like a jackass thinking that you're going to get top dollar for your property if you want to get into your dream home and it's conditional on selling your home, because it could change in a heartbeat.
Or have that conversation with the person helping you on your financing, that if my house doesn't sell in time, what are my options? Like, can I pull, is there equity there that I can refinance, convert it as a rental to purchase that new property? Is there, private financing for a bridge or whatever it may be? Like, just have those discussions up front, even before you're putting that offer in with that right of first refusal. It's beneficial to kind of do the legwork, to have those scenarios and have that discussion of if not sold, what are my options? What's worst case scenario? That way you can be maybe more aggressive with your offer. Maybe you don't need to include a condition of first right of refusal, because you know that, okay, well, my closing's 60 days out. The average time on market is 25 anyways for this type of property. I'm going to price it aggressively, but in a worst case, this is my financing options. And having that discussion with your mortgage agent ahead of time is going to save you a lot of stress and anxiety throughout that sale process, because you'll know what those next steps look like if you don't get that sale.
So here's a couple real life scenarios that I just went through. So first one, extended closing. We knew their house was going to sell. We didn't put in the condition of first refusal. Now the whole process is getting done, and the buyer who had their house for sale that we're just about to firm up on is able to move up their closing date so that they can get the house before, and they can do some renovations and everything. Everything, like you said, everything was pre-approved, kind of like already figured out before we even started the process, because initially she didn't want to go in on a property without knowing that everything. She wanted to put in a right of first refusal, and like it wouldn't work. It wouldn't work for the sellers. They didn't want to do it. So I said, look, we'll do an extended closing. We'll do it this way. You've got a perfect property. It'll sell within a month, 100%. And so we did it. And now on another one, what we did where it didn't work exactly, and we had a quicker closing, what happened was, in the end, they were able to get a cosigner. So they got a cosigner that came on the mortgage. It's going to be temporary, and their house should be selling. It'll probably sell within the next 2 weeks, and then they'll be able to, go from there. But to your point, Dave, that's exactly the other option, because a lot of people will not take a right of first refusal, especially if the property's only been on the market for under 30 days. They're not ready to do that yet.
Yeah. But it's, if you have a property to sell, regardless of what conditions you're going in, if you haven't listed your property yet, like upfront, have that conversation with your mortgage agent to look at all of the options on the table, just so you're apprised and you have them down and you're not going in to the unknown. And it helps you also be more aggressive in your negotiating, because you know that all is not lost if you don't sell that home.
And so the stress level.
Yeah, absolutely.
And the stress level. There's been a lot of stress. I'm not going to lie. There's been a lot of stress in a lot of deals I've been doing lately. And it's very interesting. It's very challenging, but I'm happy that I've been able to go through it and navigate it, because, with some of the newer agents I'm working with, they're talking to about it. They're just like, I would not be able to handle what you're dealing with right now, because it's very emotional. It's very stressful. And that's the way that the market is in a lot of instances. So you just got to be prepared. So Dave, I think, the takeaway from all of this is just be prepared. Be prepared for everything.
And now to ease that stress, should we jump into the mood boosts?
Let's do it. Do you want to do them?
Sure.
You do them.
I love mood boosts. What did the tomato say to the other tomato during the race? Catch up.
Oh!
Swords will never go obsolete. They're cutting edge technology.
Ta-da! Ta-da!
I got hit on the head with a can of Coke today. Don't worry, I'm not hurt. It was a soft drink.
Soft drink. Didn't hurt.
Paul left us with some all right.
Didn't hurt me.
He left us with a few reasonable ones.
Yeah, not bad. All right. Well,
all right.
Thanks, Dave.
Well, everyone, thanks for listening to us. If you're still listening, 40 minutes in, like, subscribe, reach out if you have questions. We're always happy to talk. If you want to add comments on any of these, absolutely. Or you can always pick up the phone and call us. We're also always happy to have a conversation.
We're professionals. We're professionals in the business of real estate. Bye-bye.